Well, in order to get an economics degree, which is needed to work at the Fed or the Council of Economic Advisors, you have to take economics courses in the university. And all of the textbooks say that banks actually play a productive role in society by providing the money for factories to buy machinery and build plant and do research and development and to hire labor, and that somehow the money that banks create is all lent out for industrial economy, and that will enable companies to make more money that they'll spend on labor. And of course, as they spend more money on labor, that's supposed to bid prices up as the reserve army of the unemployed is depleted. But that's all a fiction. The textbooks don't want to say that banks don't play a productive role like that at all. And the corporations don't do what the textbooks say. You just pointed, if you look at the Federal Reserve balance sheet and statistics that it publishes every month, you'll see that 80% of bank loans in the United States are mortgage loans for commercial real estate and mostly for home real estate. And of course, the home mortgage loans have been nothing like under 1% for the last 14 years since 2008. Only the banks and the large borrowers, the financial sector, have been able to borrow at these low rates. Homeowners all along have had to pay very high rates, just under 4%, and now it's going above 4%, heading to 5%. Well, here's the situation that the Federal Reserve has created. Suppose that you're a family right now going out to buy a home, and you find out that in order to borrow the money to buy the home, because if the average home in America costs $600,000 or $700,000, people haven't saved that much. The only way you can buy a home is to take out a mortgage. Well, you have a choice. You can either rent a home, or you can borrow the money to buy a home. And traditionally, for a century, the carrying charge for financing a home with a mortgage has been about the equivalent of paying a rent. The advantage is, of course, that you get to own the home when it's over. Well, now let's look at what's happening right now. All of a sudden, the carrying charge of mortgages have gone way, way up. The banks are making an enormous gap. They can borrow at just around 1%, and they lend out at 4.5%. They get a windfall gain of the markup they have in mortgages. And of course, the homeowners don't have enough money to earn to be able to pay the higher interest charge on the mortgages that they take out. So they are not able to buy as expensive a home as they want before. What's happened? You've had huge private capital firms come into the market thinking, wait a minute, we can now buy these properties and rent them out. And we can buy them for all cash. Unlike homeowners, we're multi-billionaires. Blackstone, BlackRock, these multi-billion-dollar funds, and they say, well, we can't make much money buying bonds or buying stocks that yield what they do today, now that the Federal Reserve has ground down interest rates. What we can do is make money as landlords. And so they've reversed the whole shift away from the 19th century landlordism to rental to economy and financialization and the wealthy classes making money on finance, to go back to making money as landlords. And so they are buying up these homes that American homeowners can't afford to buy, because when you raise the mortgage rate, that doesn't affect a billionaire at all, because the billionaire firm doesn't have to borrow money to buy the home. They have the $1 billion of their own money, of pension fund money, of speculative money, of the money of the 1% and the 10% to spend. So what you're having by the increasing the interest rates is squeezing homeowners out of the market and turning the American economy into a landlord-ridden rental economy instead of a homeowner's economy. That's the effect, and it's a windfall for the private capital firms that are now seeing that making money as landlords the old-fashioned way, it worked for 800 years under feudalism. It's coming back in style.